Hey, traders, Nick here recapping the day. Finally, a green day. Seems like it's forever, right? It's only been a couple of days, so relax. Okay, so let me start by the change today. There was a change today, and here it is right here. Right there. That's the last tick of the day. And right here, we closed strong. In other words, we didn't close weak. I know it sounds stupid, but 2 Fridays ago I told you we started closing week, and every week, every day we closed since that day for 2 weeks has been for since 2 Fridays ago has been week, 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 week. Even if we had a good day, we fade into the day. Yesterday it happened. Today, not so. That's new. I marked a change. Okay, so scoreboard. 1.23 up on the Dow, SPX 1.16, NDX 1.20, RUT 1.26. So everybody is up 1 point something. Strength came from all over the board. Biotech was really strong. Here's the NASDAQ. Here's the biotech. BIB is 5.5% up. So really strong stuff. All right, so price action today, the S&P, we kind of opened up and then we kind of let it go. And this was scary right here. And then we kind of had a little head and shoulders that could have spelled 1900s, but then we had a huge run up into this number right here, and I want to point this number out. It looks like this is the level where I thought we would have some support at 2025, and this close enough to it. And it came at volume. You can see the volume here. I noted it earlier. Let's see here. If I zoom in, you can see it. And it marked the highlight of the day. That was the high tick of the day. So I just want to keep that in mind. Apple was a champion today because it ran up 1.4% in the face of resistance, and the resistance did kick in like we thought it would, but it didn't break down. Had it broken down right here, markets would have closed red, or not red. At least we would have lost a lot of the up. Again, here it held up, so this was a champ. Right here was a champ. Okay, and as far as Google was not so happy. It ended up red, and it had a little scare. And let's see where it stands. Down 0.17, but still it broke. Oh, I didn't notice it broke fours. All right, so I know a friend of mine who is short Google, so he'll be happy with that. I have no position. This is the Nasdaq. See, like a flag sticking out here. Was a little scary a couple times, but thanks to Apple, we did not break down. All right, oil was scary overnight, 46 and change, and then bounced back up 1.3. Bonds were down. Rates were down, which is unusual, but not cause an alarm. VIX was down 7.5%, was down higher earlier. GoPro down big, Twitter down big, Alibaba down 1%. Priceline was down big, still down 1%. So there were some losers today. Not all happy. IBM red again, Yahoo red, but a whole bunch of other things are really green. So obviously the markets are green. So what do I expect tomorrow? Tomorrow we have claims coming out. Unless they are so out of the expectations, I don't expect much. Claims have been dropping, and they should, since jobs have been going up. There's no reason why claims should shoot up. And if it does, they'll say, "Oh, this was a mistake for some reason." They do happen. So this I've taken a few notes, and I'll share some with you here. First of all, I'm not going to do the video for the mornings anymore. Nobody liked it. I didn't like it. So we'll go back to what we know. The minutes today from the Fed were a fizzle because they're past. They just tell it. We know the decision. They just tell us how they said it. So the minutes were no news. Somebody said, "Is this good news?" It's no news, but there was a mention of an April date in there. I don't remember as far as raising rates, and I don't remember me hearing that date before. So the fact that they discussed the date and we didn't freak out, that's a good sign for the bulls. Remember when Yellen said, "Oh, 6 months," when somebody asked her in her first meeting? Markets tumbled for days. So the fact that we didn't react to a date, that's good. So here's the thing: the Fed did not change, and here's important. Take a pen. This is the macro thesis. It's all based on the Fed right now, at least heavily based on the Fed, or Fed state position highlights it. Okay, so the news has been out. It's been out for almost 2 years. The Fed is here for as long as we need it. Period. That's job one. Now things are better. Period. In the U.S. And then now they say we're data dependent. This right there means that the Fed doesn't know what they're going to do until the data screams something. They're looking at the CPI, which is inflation, 2%. We're not there, and that, they say that's the gauge. But then they also go ahead and say, even if we hit the 2%, that doesn't necessarily force us into acting. We may still choose to stay without increasing rates. And then they go one step beyond. They say, even when we do decide to raise rates and we raise them, let's say a quarter or something, that doesn't mean that we're going to be raising them on a set schedule, one a month or one every 6 months or one a year. They say they will raise them whenever they feel like they're raising them. So they are going out of their way to say, go out and buy stocks. So that's the macro. Leave room for upside, and there's no huge debacle where the Fed's not going to say, "Oh, we're back in it." So they're there. All right, so nice price action. I'm really encouraged by the fact that we did not close weak. This is a good sign for the bulls. I don't like one-sided games. I like the bulls to win some. I like the bears to win some. A lot of people are asking me what kind of positions I have. I am sharing my positions, so just take notes. It takes time to go back and rehash everything I've said. Basically, I was short. I cashed in a lot of my shorts, and when I took all these shorts, I took a few longs in order to hedge those shorts, but now I'm left with more longs than shorts. So today I added some more shorts and I shared those with you. Not today, in the last couple of days. So I'm balancing my portfolio. Every day I've got something green. So not one day where my P&L is blowing up or exploding in a good way. So it's a balanced portfolio. Somebody also asked me an important question I'm going to share with you. They said, I just said I went long, I went short the SPX via March monthly credit call spread expiring on the 20th of March. And they asked, could I do that same thing with a debit put spread in the SPX? I said no, because on a credit call spread, I'm not assuming a fall in SPX. I just want SPX not to run hugely up. Whereas a debit put spreads, in order to make money, the only way you can make money is if it drops if SPX drops towards the leg that you are holding long, unless you buy it in the money, which is not advised. So that's the difference. That was a really important question. So Priceline today was red. I'm not really sure why. I'm going to keep it short and sweet and not discuss any names in particular. I'll do those in separate videos if I need to. All right, Nick signing out, and this is 7-minute recap. That's like a record. Oh, one more thing. I asked what are New Year New Year's resolutions. I got a couple of answers. One was nice answer. Be as good trader as Nick. The other one is keep bonehead mistakes to a minimum. I'd say stick to rules that would cover both. If you set rules for yourself, stick to them, no exceptions. That will covers both. All right, signing out.